Food tech platform Zomato has lined up its initial public offering for July 14 to 16, hoping to raise 9,375 crore. It will be the first in series of consumer internet companies and startup raising public money in India post-pandemic. Let's look at the details of Zomato's IPO. The Zomato's offer size of 9,375 crore marks an increase from the previously announced 8,250 crore when it filed draft documents with the market regulator SEBI in April. It has a set price band of 72 to 76 per share. Bitscan made a minimum of 195 equity shares and in multiples of 195 thereafter. Of the total offer size, shares worth 9,000 crore are fresh issue, while the remaining is an offer for the sale by Info Edge India Limited. Why an IPO during the pandemic? Let's look at that. While the pandemic has severely hit the public sector, business improved for consumer internet companies after the initial lockdown last year. These benefited once home delivery of food was permitted while restaurants were not allowed to open. According to Zomato's filings, the gross order value on its platform fell to rupees 1,093.63 crore for April-June 2022, 2,684.91 crore in January to March 2020. It has then rose to 2,981 crore for October-December, higher than in the same quarter the previous year. The first 9 months of the FY 2020-2021 show an improvement in unit economics of Zomato's business, with commissions and delivery charges raising company to 1920 and discounts falling greatly. In a press conference Thursday, Zomato's leadership said, compared to the first wave of COVID, its business did not witness a negative impact during the second. Zomato's investor information edge will divest a part of its stake for Rs 750 crore through IPO. Travel agencies MakeMyTrip.com and Yatra.com have listed in the US. E-commerce firm Infinity and Injamala are recently easy trip planners have done so in India. Up next, fintech firm Paytm has lined up 16,000 crore IPO, cosmetics from Nykaa, logistics from Delivery, and online insurance aggregator Policy Bazaar are set to be considering IPOs to raise funds. What are the opportunities and challenges ahead of Zomato? Let's look at that. Given that the company saw solid growth in the business during the pandemic, the question is how to plan to sustain the growth once things normalize. However, Zomato is present in a sector that has a high entry barrier for new players, and this could help it grow as the market size grows. The pure play food delivery segment is a virtual duo play between Zomato and Swiggy. Last year, American ride-hailing giant Uber quit the food delivery segment in India and sold Uber Eats India to Zomato. Lately, there have been indications of the segment bubbling up with entry of Amazon into food delivery and restaurants starting an order direct program without going through aggregators like Zomato. How should investors view startups and consumer internet companies? Let's look at that. Analysts say each startup should be seen as a separate business, not as belonging to one basket. Some feel a company like Zomato has opportunities for big business and growth and could be a good long-term investment. Food ordering has become a social need, and valuation apart, I see potential in such companies. Investors can get into them for long-term gains and not just for listing gains. Even if one does not get a decent allotment in the IPO, as it will depend on the oversubscription, people can buy its stock in the secondary market post-listing, said the research ahead of a leading brokerage firm. Experts advise one investment in fintech company as banks too have enhanced their digital presence. For companies that have not been able to clearly redefine their business model and keep changing their focus, investors needs to exercise caution, said a senior official with a financial service firm. What to look for before investing? Let's look at that. Besides the business model and scope of expansion, it is very important to look carefully at the pricing of the issue. If the company launching an IPO is demanding a higher valuation, investors may wait to take an entry. To get sense of the quality of the issue and its pricing, it is important to look at the subscription by qualified institutional buyers. A very low level of subscription would mean institutional investors do not see a strong investment proportion. On the other end, a very high level of oversubscription would in turn also mean a huge retail subscription and a very little allotment, thereby making the exercise futile. While a retail investor can apply for a shares worth 2 lakh in an IPO, if the retail subscription level is 50 times, it would mean the investor would only get shares worth Rs 4,000, which experts feel is not worth blocking Rs 2 lakhs for 10 days. However, investors avoid chasing the stock after a strong listing, which could be often be on account of huge oversubscription. When a large number of investors sell their allotted shares within a week of listing, the share would go below their issue price. Investors must wait for a few days to understand the company and investor interest post listing before they decide whether to invest.